Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 future charts on this final trading session of the week. Just before I start today's video, anyone who's interested in joining my trading signal group, then scroll over to Google and type down dailymarketmovements.com. The website link is in the description of today's video and that will take you to my website. Once on my website, if you scroll down, you can just simply click subscribe. Where you can join my trading signal group for a very small fee of $29.99. Of course, that will give you access to my daily market research that I also post over on the Signal Telegram group channel. But it literally takes a few minutes to subscribe. So if you get any spare time over the weekend, then it would be really good to welcome you on board the Daily Market Movements trading signal team. But let's get started here with today's video. Very choppy market, up and down, pre-market. Then also, as soon as the session began, we are seeing lots of volatility in the markets, and that was largely due to the fact we had PPI that come in slightly better than expected today, down 0.1%. So that's negative 0.1% versus 0.1% expected at 0.1 positive percent. So, a lot better, 0.2 of a percentage point lower than expected. And that did actually cause some upside volatility in the markets. We have the S&P currently trading at 4,780. So we are pretty much knocking on the door for an all-time high. I think our close would have to be above 4,796. So 16 points away from getting that all-time record close high. And I think it will happen. But I must admit, team, I am very, very nervous for the upcoming weeks. January, historically speaking, in a election year is a very choppy month of the year, and typically speaking you do now start to see some negative volatility towards the downside before attempting to hit the highs of the month in the final week. So I would not be surprised if we did see prices move lower. One other thing I need to talk about, of course, is what's happening over in the Red Sea. Last night we heard news that US and UK operations have now struck 60 different locations in Yemen, targeting their terrorist group organization. And as a result, we are seeing some nervousness in the market. Traders are starting to become a little bit nervous. And of course, don't forget, on Monday, it's Martin Luther King Day. So what does that mean? It means that we're about to enter into a 3-day weekend. Now, we heard from the Yemenis rebels that they are going to strike back in retaliation to the US and UK strikes on those 60 targets. What does that mean exactly? Well, we'll soon have to find out. But, they basically openly said that they are going to retaliate. And as we are about to enter into a 3-day weekend, I'm telling you right now, especially traders, but also some investors, they won't want to be 100% invested going into a weekend where we could see some negative headlines across, different news channels if they were to retaliate, of course. So I definitely think that we have got the risk of selling off into the close here as investors start to close out their positions going into the weekend. I am positioned for that. I currently do hold a position here in the S&P 500. You'd have to join my trading signal group over on dailymarketmovements.com to find out what these trades are. Moving over to the Nasdaq100, similar to the S&P, we're kind of flattish, slightly positive, 0.2%. But again, we have seen lots of volatility throughout the day. Of course, that PPI has helped things. It means that I think the expectations for a Fed cut in the month of March was sitting at around 63%. That order's now jumped to 78%. So that, of course, is benefiting the tech sector, and that's hence why we are seeing it trading back up near its all-time high. Moving over to the DowJones30. Now, this is a chart I really want to talk about. This does set up for a fantastic selling opportunity. Lots of bearish divergence going here. We have the index that's moving higher, RSI that's moving significantly lower. And ultimately, it's normally the RSI that ends up winning. If I take you over to my DeMark indicators as well, here we go. And if I just type down Dow, for example, you will see that there is some real bearish divergence here and some big sell signals. We have 13 combo, 13 sequential. These are sell setups, and ultimately I do expect this market to crack. We have the risk area of being around 38,000. So what does that tell me? That tells me that pretty much the market indicator doesn't expect the Dow to go and break above this 38,000 area. So I do anticipate that we are going to see a breakdown in price here for the DowJones30. Perhaps we go down towards 37,000, and I think that will be needed to digest these strong gains. Even if we saw, let's say, a 0.236 test of this fib area, that takes us all the way down to 36,500. So I do think in the coming days and weeks ahead, this is an area where we are going to target, especially as we work into the way of February. That's going to wrap it up for today's video, guys. Thank you very much for tuning in this week for my YouTube videos. Don't forget, if you'd like to join my YouTube channel, sorry, my Signal group, then make sure you go over to my website, dailymarketmovements.com. I've left the website link in the description of today's video, and I look forward to welcoming you all on board my Trading Signal group. Have a lovely weekend all, and thank you.